All right. So today we're going to be looking at the introduction to Forex trading. Good evening, Daniel FX. We're looking at the introduction to Forex trading, and my name is Rotimi Olawale. I'm your host, I'm your trainer, and the head of training and education, PU Prime Africa, Lagos office, right here in Nigeria. Yes, thanks for all the responses. Let's get started. Understanding the basics of trading in the global financial market. Now, I will not want you to miss any of these bootcamp sessions from today down to Sunday because it's loaded with a lot of information, that will help you become a better trader. You're going to be trained by seasoned traders with combined trading experience of well over 20 to 30 years. I mean, combined. I've been in the industry for about 10 years plus now. So you are getting the right information from the right people. And my other colleagues I'll be training also, every one of us, we are very vast, very experienced. We're not just trainers, we're equally traders. So you are getting practical knowledge that you can use to become profitable traders in this business. All right, let's get started. Please mute your devices so that you don't cause any distraction in this class. Okay, so what is global financial market? Now we say that the global financial market refers broadly to any marketplace where the trading of financial instruments and securities occur. Now, from the word global, we mean that it's a worldwide market. From the word financial is from the root word finance, and that talks about money or economics. And market is a place where we buy and sell for the purpose of making money. So we can say that the global financial market is our online marketplace where the buying and selling of financial assets takes place. Financial assets like stocks, like commodities like gold, like cryptocurrency, currencies, and many other assets like that. And we say that this market relies heavily on informational transparency to ensure that the market set prices that are efficient and appropriate and are practically governed by the forces of demand and supply. What we're saying is that this market, as big as it is, what controls this market largely is the forces of demand and supply. Now, these are the sub-markets under the global financial market. We have the stock market. Under the stock market, we talk about buying and selling stocks of international companies like Facebook, like Amazon, like Twitter, like LinkedIn, Microsoft, Google, and so on and so forth like that. And on indices, we look at indices like S&P 500, like NASDAQ, Dow Jones, and so on and so forth. And other commodities, we have crude oil, we have gold, agricultural produce, and other cryptocurrency, we have Bitcoin, Ethereum, and many other crypto assets like that. And under the forex market, basically we'll be looking at currencies. So these are the 5 arms of this global financial market. Now, the most popular of them all is the forex market. And that's why when you talk about trading, the first thing that comes to your mind is forex trading, because it's actually the biggest of all the markets. And forex trading has an estimated daily trading volume of about $7 trillion. And that makes it the biggest market ever, known to man. No market is as big as the forex market. So we look at just briefly at the functions of financial markets. So we say that financial market exists for several reasons, but the most fundamental function is to allow for the efficient allocation of capital and assets in a financial economy. And we see that the financial market also makes the global economy to run more smoothly while also allowing investors to participate in capital gains over time. Now, it's because we have a financial market, that is why companies can do business internationally. That's why foreign investors will come to our country or other countries and go to invest. The financial market has made the world in terms of finance to become a global image. That's why the world economy, is intertwined with countries doing businesses together, because there's a central market where everybody can exchange, goods and services and have their forces of demand and supply, being met, making the economy run more smoothly. So we look briefly at the history of the market, internet trading. In the 1990s, the currency market grew more sophisticated and faster than ever because money and how people viewed and used it was changing. Now, the thing is this, before the 1990s, the kind of money we were spending, which we still spend today anyway, is more of what is called the fiat money. That's the paper money. But in the 1990s, a lot of online platforms began to spring up. Money became digital. Platforms like PayPal, like Skrill, NetTeller, began to spring up. And at that period, it's also because the internet also started. So with the advent of the internet brought a lot of revolution, to the global market generally, to how we do business. And the internet turned our world into a global village because with just a click of the mouse on your laptop or your phone, you can now do business. And this was not available, up until that time. So the internet also has contributed largely to the way we do business. So now, because of the internet, you can have your funds on your account with PU Prime, for example, and without the interference of a third party, you can take trades all by yourself. You can do forex trading all by yourself in your house, at work, anywhere, with the device connected to the internet. So the internet has made all this possible. With the internet now, you don't need to travel abroad to import products into Nigeria, to buy things you want to use for yourself, which is what used to happen before. Back in the days when I was younger, when you have a relative that is traveling abroad, you will write a list of the things you wanted to buy for you. Every family and friend will write all sorts of lists for them. So when they go abroad and they're coming back with excess luggage of things they've bought for family and friends. Now, if that person is not traveling, you will not think of buying something. But because you know someone is traveling, you send the person on errand. But nowadays, you don't need to do all that. You can just pick up your phone now and go to jumia.com or go straight to Amazon and buy something just by pressing your phone. And in a matter of some days, that goods or service, is already delivered. If you are ordering for a product, within a matter of a week or two, you can get your product right here in Nigeria. So the internet has also contributed largely to how we do business, especially in the financial market. So we say that the forex market is the backbone of the modern economy. And that's true. The forex market, without the forex market, we will not be able to do business the way we do it today. It's because there is a forex market. Forex simply is for currency exchange. So it's foreign exchange, rather FX. FX means foreign exchange. It's simply the place where you can exchange one currency for the other. And that is made to be possible through what is called an exchange rate. It's because there is a forex market, there is an exchange rate. That is why Nigerians will travel to a country like America and buy cars and send it to Nigeria. They buy it cheap over there, send it to Nigeria, and they sell it at exorbitant amount because there is a market where they can convert, the money. That's why those who are doing exportation, they are also making a lot of money because there is a market where they can exchange our local currency for the foreign currency. So we say the forex market is the backbone of international trade and global investing. And without the ability to trade in different currencies, companies' prospects will be limited and global economic growth will suffer. Investors also use the forex market. Before any investor goes into a new country, one of the things they look out for is the exchange rate of the country they are going into, because that will determine to a large extent whether they will invest in that country or not. If the exchange rate is not stable, they will not want to invest. So that tells you how powerful and how important this foreign exchange market is, because it's crucial to global economy, very, very crucial to how we do businesses globally. Just a second. Now, we want to look now further. We're narrowing it down now to the forex market. So who are the participants in the forex market? Don't forget we said the forex market has an estimated daily trading volume of about $7 trillion. $7 trillion is traded every day, Monday to Friday, every week like that. Now, the question is, how do we come about these transactions? Who are those that participate, in all these transactions to have such kind of volume? And that's what we want to briefly look at. Now, the first major participants in this market are called the institutional investors. And these are big financial corporations that are having asset base running into billions and sometimes trillions of dollars. For example, JP Morgan in the United States is a very, very big financial firm. And also we have the commercial banks, commercial banks like our First Bank, our GT Bank, our Zenith Bank, and the likes. And thirdly, we have brokers like PU Prime. We are also a major participant in this market because what we do is that we provide the technology through which traders can access this market to do business and make profit. So the primary function of a broker is that the broker acts as an intermediary between the retail trader and the market. If you have $10,000 cash with you, that doesn't guarantee you will enter into the market to trade, into the forex market, I mean. But when you put your $10,000 on your broker's platform, you are open to a world of global opportunities in this market to trade and make profit for yourself. So the broker gives you that gateway to access the market to trade and make money. Then the other participants in this market is retail traders, that is individuals like you and myself. We are all retail traders or individuals in this market. And how we make money or how we contribute into this market is largely through what is called speculation. That is, we anticipate a fluctuation in prices, for us to buy. We anticipate when prices going up, we buy to make profit. And when we see price coming down, we sell, to make profit. That's how we participate in this market. Then we have the companies. The companies participate in this market through large volume transactions, especially through importation. A lot of big companies that are into manufacturing, they import raw materials into the country. Now, when they're importing these raw materials into the country, foreign exchange transaction is involved, sometimes running into hundreds of thousands and sometimes millions of dollars. Example is a very good automobile company in Nigeria like Innocent and many others. So these companies are major participants into the pool of transactions that make up what we have as the as the forex market with an estimated $7 trillion trading volume that I mentioned earlier. And finally, we have the central bank. And the primary function of the central bank is that of regulation. The central bank regulates the economy. That is the primary function of the central bank. The central bank determines interest rates and creates an enabling environment, for the economy to grow. So that is the primary function, of the central bank. They do that through policies. They bring up policies that help the economy to grow. Now, we said that the forex market or the global financial market is the biggest market, can be accessed from anywhere in the world, Now, same thing, the forex market is part of this global financial market. Forex market itself runs 24 hours a day and 5 days a week. That is, the market runs from Sunday night to Friday night. The market opens Sunday night around 10, 11 p.m., depending on the daylight savings. Currently now, as the daylight saving has been activated, so the market starts by 11 p.m. on Sundays, and this will continue till the ending of March 2025. So the market starts 11 p.m. on Sunday and ends by 11 p.m. on Friday, 5 full days. The market does not run on weekends, and that's because banks do not operate on weekends generally. So the market runs 5 days a week. Though the crypto market is always on, even on weekends. If you check the platform, the cryptos will be on, but currency trading is only from Mondays down to Fridays. Now, we say that this market is a global market, meaning anybody from any part of the world can access this market. However, because all of us are not living in the same time zone, all of us will not access this market at the same time. For example, now for us who are living in Nigeria, I believe most of us on this platform tonight who are living in Nigeria, it's just around 7:30 p.m. in Nigeria. Now, for somebody that is in the United States, now most of the states in the US, they are like about 6 hours behind our local time here in Nigeria. So for an average American, the time will just be maybe around 1:30 p.m. in the afternoon. So in the morning, while we in Nigeria, we've been awake to trade the morning session by 8 o'clock. An average American was still sleeping at that time. Time will still be around 2 a.m. in the US. So because of this difference in time zone, the market was now broken down into what is called market trading session or market session. so that irrespective of the time zone that you are living in, you can still participate in this market. So there are 4 of these market sessions, though we actually pay more attention to 3. The 4th one, we don't talk about it because nothing much really happens there. So we look at the 3 major market sessions. We talk about the Tokyo session, the London session, and the New York session. You can see it on the screen, the table by the side here, Tokyo, London, and New York. And the 4th one is the Sydney, Australia session, but that one, nothing really happens in that session. So it's a very quiet session. That's why we don't really talk about it. So our focus is on the Tokyo session, the London session, and the New York session. So the Tokyo session runs from 1 a.m. Nigerian time to 10 a.m. Nigerian time. And the London session runs from 8 a.m. Nigerian time to 5 p.m. Nigerian time. And the New York session runs from 1 p.m. Nigerian time to 10 p.m. Nigerian time. I'll take that again. Tokyo session runs from 1 a.m. to 10 a.m. London session runs from 8 a.m. to 5 p.m. And New York session runs from 1 p.m. to 10 p.m. Again, Tokyo session 1 a.m. to 10 a.m. London session 8 a.m. to 5 p.m. New York session 1 p.m. to 10 p.m. Now that takes us to something very important, and that is the best time to trade Forex. Now, one of the best times to trade Forex is when we have what we call a market session overlap. That is when 2 market sessions are running at the same time. That's one of the best times to trade Forex, when you have 2 market sessions running at the same time. And one of such period is when you have an overlap between the Tokyo session and the London session. You can see as I'm drawing on the screen now, that is between 8 a.m. and 10 a.m. It's one of the best time to trade Forex because 2 markets are running at the same time. So what's the implication of 2 markets running at the same time? The implication is that there is sufficient volatility to drive the market at that period. See, we make profit when the market is moving and is volatile. Volatility talks about activity, price moving. For example, earlier on in the year, there was a time our exchange rate just kept going up till it got to 2,000 naira per dollar. Then suddenly it dropped from 2,000 naira per dollar to 1,100. As at the beginning of this week, it has moved again to like 1,700. That talks about volatility. If the market, imagine if our exchange rate is just 1,100 for a whole year, it does not change from that spot. Nobody's going to make any money. But you make money when the market is volatile. So excessive volatility is really not good, but at least moderately volatile. So that is what happens here when there is a market session overlap. 2 markets are running at the same time, bringing us sufficient volatility for us to trade and make profit in the market. And this overlap session happens twice in a day. The first one is at 8 a.m. to 10 a.m. And the second overlap session is between 1 p.m. to 5 p.m. This one is a 4-hour period. The first one is 2 hours. The second one is a 4-hour. So what we do at PU Prime is that we give our clients opportunity to make money from this market by organizing analysis session for each of these 2 sessions every single day, Monday to Friday, throughout the year. I believe some of you on this platform, you've attended our analysis session, morning analysis by 7 a.m. and the afternoon analysis by 12:30 p.m. So what we do is that we are giving you insight into what to expect in those market sessions so that you can take advantage of the information we give for you to make profits in this market. You know, I was having training at the Lagos office, physical training today, and one of the students was telling me one of the analysis we had at the beginning of the week where we gave direction of what is to happen, the specific currency pairs to trade. And he said it took the advice, it took the analysis to trade on his own account, and he was able to make about $40. That's what we do at PU Prime, giving you the right education, the information, you know, to become better traders. And we look at this best period of the day to trade, which is 8 a.m. to 10 a.m., then 1 p.m. to 5 p.m. We guide you on the specific instrument that will be moving in the market during that period in order to make good money from this market. All right, we'll look briefly at each arm of this global financial market. Once again, we talk about global financial market now, and we'll look at the Forex market. Yeah, thank you, Cool Prince. Cool Prince is saying, don't be lying, even me too, end to date. Thank you for that. Thanks for that review. Thanks for that review, Cool Prince. So if you've been joining the analysis, you're making money, let us know. Just encourage us. And I will also say that you can even go to the WhatsApp group where you belong to, which you got from where you got the link to this Zoom class. Go there and drop your testimonial. Whatever you benefited from PU Prime in terms of signal, in terms of education, just put it just type something like that and put it in your WhatsApp group so that others can be encouraged, and know what we're doing right here. Wow, I'm seeing another testimonial here. It says, with your analysis, sir, I made far more than $40 weekly. Can you imagine? Mo Bello, that's a very powerful testimony, because if you're making $40 every week with the current economy in Nigeria, that's a good money. $40 now will be something in the range of about 75,000 naira, like that. So you're making about 70,000. Let's just say on the average 70,000 every week times 4 weeks in the month. That is 7 times 4. That's about 280,000 naira clean profit with the capital still intact. So if you're there this evening, you are still on the fence. You don't need to be on the fence. You are at the right place. This is PU Prime. It's a good thing that these testimonials are coming from people that are on the platform tonight who have been a part of us, who have been joining our sessions. So you know that this is very, very legitimate. Our aim is to make you better traders. That's what we stand for. And we do that by giving you quality education. And that's part of the training you're attending tonight. We want you to become proficient traders, making good money from this market. See, let me tell you the truth. Forex is real. It's very real, but it's for those who are well equipped with knowledge. And that's why at our education department at PU Prime, we aim at giving you the best education to make you profitable traders. All right, let's continue. So we want to look briefly at each arm of this Forex market, or sorry, the financial market generally. So we're now talking about currency market. Now, on the screen now, you can see different currencies and the trading volume for each of these currencies, as you can see listed. You can see somewhere here, you can see Singapore. Okay, let's start from the base here. South African Rand has an estimated trading volume of 1% in the global market. Let's go up. Canadian dollar has 5.1%, Australian dollar 6.9%, British pound 12.8%, Japanese yen 21.6%, euro is 31.3%, but the United States dollar has 87.6% trading volume. Now, in the forex market, it is said that dollar is a king. The American dollar is the most traded currency in the forex market. It is the most traded. There's no currency that is as traded as the American dollar, globally in the forex market. Now, you may ask the question, why is the dollar the most traded currency in the forex market? The answer is not far-fetched, and there are some reasons for that, which I will share with you just now. Number one, as at this moment, the United States remains the country with the biggest economy globally. There is no country's economy that is as strong as that of the United States as at the moment. So that alone is a plus for the United States dollar. The second reason why the dollar is the most traded currency is that there are some transactions that are called cross-border transactions. And these transactions are always done in dollars. For example, if you want to buy crude oil in the global market, crude oil is always bought, it's always sold rather, using the American dollar. The American dollar is a benchmark currency for selling crude oil globally. So, and there are about 200 countries in the world as we speak. And each country in the world uses crude oil, at least as petrol, to power our vehicles. So you can imagine if 200 countries are buying one commodity using one particular currency, then that currency will be the most traded currency in the world. So these are just two out of the reasons why the dollar is the most traded currency, generally in the forex market. Now, if you look at the table by the side here, you will see major currencies. Now, there are some other countries also that have very good economy, that have very strong economy. And these countries are called, the currency of these other countries are called the major currencies. And what currencies are we talking about? We're talking about, we've talked about the United States. The symbol is USD, country is United States. The currency is dollar, and the nickname is the buck. Then we have the euro from the Eurozone. The currency is the euro, and the nickname is the fiber. Then we have the JPY from Japan. The currency is the yen, and the nickname is yen. And we have the GBP from Great Britain. The currency is pound, and the nickname is cable. We have CHF from Switzerland. The currency is franc, and the nickname is Swizy. Then we have CAD from Canada. The currency is dollar, and the nickname is the loonie. We have AUD from Australia. The currency is dollar, and the nickname is Aussie. And we have the NZD from New Zealand. The currency again is a dollar, and the nickname is the Kiwi. Sure, Mr. Terrence, you'll get the video. You get the video, we'll upload it on our YouTube channel, and we'll also send a link to the WhatsApp group. All right, so let's look briefly at the commodities market. Now, the commodities market is divided into three parts. We have the energy market, the metals, and the agricultural produce. The energy market accounts for 31% of the commodities market. The metals account for 35%, and the agricultural produce account for 34% of the commodities market. So under the energy, we have natural gas, crude oil, Brent crude, heating oil, and unleaded gas. Under the metals, we have gold, we have copper, we have zinc, we have nickel. And under the agricultural produce, we have corn, soya beans, coffee, sugar, live cattle, wheat, and other agricultural produce. Now we'll talk about indices briefly. Now, indices are actually derived from the stock market. Yes, Mr. Oni, the recorded version will be available. So indices, like I said, is an offshoot of the stock market. If you listen to CNN News, after sharing most of the major news around the world, the breaking news, then CNN will start talking about financial news, and you start hearing some terminologies like NASDAQ, like S&P 500, Dow Jones. These are actually what we call indices. The singular is index, the plural is indices. Indices are the value of the stock value of a sector, the combined stock value of a sector of the economy. For example, in the US, there's a sector of the economy that is called the tech sector. That is the technology sector. Now, this technology sector, under the technology sector, you have companies like Amazon, like Google, like Microsoft, like Tesla, like Facebook, and so on like that. Now, each of these companies have their individual stock value on the New York Stock Exchange. So when they now add up the stock value of all these companies, these technology companies together, they now derived another tradable entity, which is now called the NASDAQ. And that's the way also there are some other companies that are also from different sectors that form the Dow Jones, the S&P 500, and many other indices like that. It's like saying in Nigeria here, we have our banking sector, and we have our First Bank, our Zenith Bank, GT Bank, and the likes, and we add up the stock value of all these banks to form another tradable entity, which is an index. So that's how indices are derived. And the next on the list is a cryptocurrency market. The cryptocurrency market is an offshoot of the global recession that took place between the year 2007 and 2008. And the most prominent cryptocurrency is the Bitcoin. When Bitcoin was released many years ago, around 2008, 2009, it was just a few cents. But just this week, just from last week that Donald Trump won the election, there has been a massive surge in Bitcoin that's gone as high as $91,000 per Bitcoin. I mean, it's an ever-evolving market that is very, very volatile. So even when you trade Bitcoin, please trade with a lot of caution. But then it's the cryptocurrency market has come to stay. There are now many other aspects of this market that are still evolving. Trading. Trading, when we trade currencies, currencies are always traded in pairs. What do we mean? I'll start by defining what forex trading is. Then we'll go into trading currencies in pairs. Forex trading simply is the exchange of one currency for another. So if you've ever exchanged naira for dollar, you've done forex trading. Forex trading is not until you carry laptop and phones to trade. No, it is simply an exchange. So if you want to travel to US and you need the American dollar cash, and you go to the exchanger, we call them aboki here in Nigeria, because they are the ones that mostly sell currencies to us. So you give the aboki naira, aboki gives you dollar. You've done forex trading. You've exchanged naira for dollar. Now, in that transaction, two currencies are involved: the naira that you are having and the dollar the aboki is having. So when it gives you the dollar and you give him the naira, you've done forex trading. And we now say that the exchange of these two currencies, when you match these two currencies together, they are now called a currency pair. That is naira and dollar, because those are the currencies involved in that transaction. So we see that trading is done in pairs. So you have what is called a currency pair. That is the two currencies that you are having transaction, you are exchanging one for the other, is called a currency pair. Now, there are three categories of currency pairs. There is the major currency, the cross currency, major currency pair rather, cross currency pair, and exotic currency pair. I'll tell that again. We have the major currency pair, the cross currency pair, and the exotic currency pair. Now, the major currency pairs are formed when we match any of the major currencies, which we mentioned earlier, when we match them with the dollar. This is the table showing us the major currencies. When you match any of these currencies with the American dollar, you have formed a major currency pair. And that's what you can see on the table here. You have the major currency pair: Euro US dollar and Japanese yen, GBP USD, USD CHF, USD CAD, AED USD, and New Zealand USD. And these are called the major currency pairs. And we say that these major currency pairs, they are the most liquid in the world. And liquidity is used to describe the level of activity, that is the level of transactions. Many countries do business with these specific countries, thereby leading to more trading volume of these currency pairs. So they are called the major currency pairs. And one characteristic of these major currency pairs is that they are not too volatile. They are easy to manage for beginner traders, most likely like yourself. If you're on the platform tonight, you are a beginner trader, then we'll encourage you to focus more of your attention on these currency pairs. They are very, very easy to manage for beginner traders. The next category of currency pairs are called the cross-currency pairs. Now, the cross-currency pairs are formed when you match two major currency pairs together without the dollar. So if you go back to this table here now, and we said the cross-currency pair is formed when you match two major currency pair without the dollar. Now we have the euro and US dollar, the US dollar and Japanese yen. If I cancel out the dollar across these two, I'm left with euro JPY, and that's a cross-currency pair. Again, if I come to the next line here, I cancel out the dollar here, I'm left with the British pound and the Switzerland franc. That's GBP, CHF, and that's equally a cross-currency pair. So whenever you match two major currency pairs together without the dollar, you have simply formed the cross-currency pair. Now, cross-currency pairs are more volatile than major currency pairs. The third category of currency pairs are called the exotic currency pairs. Now, the exotic currency pairs are formed when you match any major currency pair. It can be dollar, it can be pound, it can be anyone. When you match it with the currency of an emerging market. So the exotic currency pairs are formed when you match any major currency pair together with the currency of an emerging economy. Emerging economy like Brazil, like Mexico, like Chile, Turkey, South Africa, or Hungary. Now, these exotic currency pairs, just like the name exotic, they can be extremely volatile. Many times we advise a beginner trader like yourself should stay away from these currency pairs. They can be too volatile for you to manage as a beginner trader. This table here shows the most actively traded currency in the forex market. And the most traded currency pair today is the Euro US dollar, with about 28% trading volume in the market. Now, this currency pair is very, very easy. It's beginner friendly. If you're a beginner out there tonight, I will encourage you to even focus more attention on this currency pair. The spread is very low and is not extremely volatile. Very, very easy to manage. Followed by the USD JPY, the GBP USD, and others. So what do you need to start trading Forex? Number one, you need a trading device. The trading device can be your phone, it can be your tablet, or it can be a laptop. Now, many people ask the question, is it mandatory to start trading Forex with a laptop? And I would say the answer is no. If you have a laptop, it's good. But if you don't have a laptop, you can still get started all the same. Now, where a laptop comes in is when we get really into the advanced class and we need to do a lot of chatting, a lot of drawing lines, support resistance, as in-depth analysis. In such instances, the phone may become limited. And the difference in that is that the laptop has bigger screen with which you can see your charts better compared to a phone. But nonetheless, the phone is still very good. You may do your copy trading with your phone. Even your tablet, even if you don't have a phone, you have a tablet, the screen of the tablet is still bigger than a phone. It still goes. So if you don't have a laptop, it's not a barrier. You can get started with your phone. That's just what I'm trying to pass across. Then you need a stable and high-speed internet connection. Forex trading is internet business, so you will need the internet to do this business. Now, we're not suggesting that you go and get unlimited data access. That's what we're saying. You can start with the data on your phone. It's as simple as that. It doesn't have to be expensive data at all, but just make sure that you constantly have data in your phone if you're trading Forex, and it must be a fast connection so they can easily log into your account and check your trades. Then the third thing you need to start trading Forex, you need limited fund. And at this point, we will say that no amount of money is too big to trade Forex. Now, I know we're Nigerians and there's a way we are wired. When we say no amount of money, I know what comes to our mind is that no amount of money is too small. No, that's not the way it works. We say no amount of money is too big. What do you mean by that? You have $100,000, you can trade with it. You have a $10,000, a $30,000, a $1,000, 500, 300, it all depends. And people always ask me the question that, what's the minimum amount to start trading? The truth is that there's no minimum amount. What you should be looking at is how much am I willing to make? So it is a profit you want to make that should drive your minimum. So it's not that we can't tell you there's a minimum in the real sense of it. If you want to make a $500 by December, then you put in something reasonable. We don't encourage you trying to have unrealistic expectation by saying, okay, fund $50 and you make $500. No, it doesn't work that way. Fund something reasonable and also have a reasonable expectation in terms of your results. So if what you have is $1,000, get started. 5,000, get started. 300, get started. Just fund something reasonable and you'll have a reasonable return on your account when you start trading. And finally, you have the last point here. What you need to start trading, you need a reliable and trusted Forex brokerage. And that is where PO Prime comes in. We are a globally regulated Forex platform. Our global head office is in Australia, and we have 2 offices in Nigeria, Abuja and Lagos. And I tell you that we reach over 100 nations. We have support staff in over 30 languages. Irrespective of the language you speak, we have support staff that can speak your language and, be of help to you if you reach out to us. Now, in trading, what we do basically in trading is that we are buying low and we are selling high. That is all we do in trading. When I'm talking about trading now, I mean generally in online trading. Either you're trading stocks, you're trading indices, you're trading commodities, you're trading currencies, or you're trading cryptocurrency. All we're doing is that we are buying when the price of a financial asset is low and selling when the price of a financial asset is high. We buy low, we sell high. That is how we trade in this market. Now, you need to know this thing about trading. In trading, three terminologies you need to get started. And the first one is, okay, somebody is saying my screen is not showing. Is that true? Please, I need confirmation. Someone is saying my screen is not showing. Can I get a response, please? Please, I need our feedback. Is my screen showing? Okay, Mohammed is saying mine is showing very clear. EBS is showing. So that person, maybe it could be a network issue. So please check your network if you are not seeing my screen. It may just be a network from your end showing here. Thank you, Olusegun Ayomikun. Thank you, Cole Prince. All right. So these three terminologies will get you started. And the first one is the entry price, the take profit, and the stop loss. And these are foundational terminologies, in Forex trading: entry price, take profit, and stop loss. So what is entry price? The entry price is the price at which you are executing a trade. It's the price at which you are entering the market to execute a trade. So when you want to place a buy trade, for example, there is a specific price at which you are entering the market when you place that buy trade. The take profit is that level where you have instructed the platform to close the trade when the market is in your favor. So maybe you entered a buy trade and the market goes up by about some 50 points. And you've already programmed on the trading platform that when price gets to 30 points, you want the platform to close the trade in your favor. That area where you have marked for the platform to close the trade is called the take profit. So is that level where price has gone in your favor and you want to close your profit? It's called the take profit. And the third one is called the stop loss. And we say the stop loss is you telling your broker how much you are willing to risk with your trade. Now, we need to clarify this. You telling your broker how much you are willing to risk. Now, when you're trading Forex, when you are entering the market, it means you're willing to take a risk in order to make a reward. That's the way it works. And the word risk is not a bad word. It's a regular word that, even though we don't use it, we are exposed to it on a daily basis. In every business, there is risk. You make profit in business because you took risk. However, the level of risk varies from one business to the other. Some businesses are high risk, while some are low risk. So there is risk involved in Forex trading. But what we're saying is that if Forex trading is one of the few businesses where you can actually plan on the level of risk you want your account to be exposed to. And the stop loss is one way you can limit your risk in Forex trading. Now, usually you are not expected to risk more than 2% of your account per trade. So if you put a stop loss that is 2% of your account, what you're saying is that if I enter this trade and for one reason or the other, the market did not go in my favor as planned, if the trade is going to be a losing trade, I don't have a problem. Let it be a losing trade, but I'm only risking 2% of my capital. So what that means is that if you have $1,000 and you are risking 2%, that is just $20. So you are saying that if the trade goes against me, I'm willing to lose $20 while I still have $980 on my capital still intact. Now, that way, your account is still better protected compared to the person who did not use a stop loss and the market goes minus 10, minus 20 to minus 100. It is penny wise, pound foolish. Instead of you to risk 2%, end up risking 4, 5%. That will not be too healthy for your account. So we always encourage our clients to make sure they use the stop loss order when they are entering trades as a Forex trader. Finally, in this session, we'll look at the benefits of trading Forex. And the first benefit of trading Forex is high liquidity. So we say the Forex market is the most liquid financial market in the world with an estimated daily trading volume of $7 trillion. I mentioned this earlier for those who are just joining us. $7 trillion is traded every single day in the Forex market. And the implication of this? It means that there is enough money to go around everybody in this market. You know, some people have the feeling that in forex trading, when somebody make profit, it's because somebody is making a loss. That's why another person is making profit. No, it doesn't work like that. There's enough money to pay everyone. If I make $1,000 today, you make a $500. The next person makes a $10,000. Everybody will be paid, and this market will not feel it because the volume is large, and that's just the truth. So that means you can be making your daily bread. You're for those who are just joining us, somebody shared a testimonial some minutes ago how he makes $40 every week using our analysis at PU Prime. This person is making cool 280,000 naira every month with PU Prime. I don't know what it does for a living, but you know, no matter how much you complain about Nigeria, if you're having additional 280,000 to whatever you are earning, life is still good. So this person's profit